why should I look at investment sales? The reason you should as either a broker or an investor is because that's where you're going to make the biggest jumps in your either commission dollars or your net worth as far as any real estate activity. Like we mentioned before, if you want to have bigger gains, maybe work on a .com, right? Those multipliers are crazy. But in the real estate world, this is the fastest way and the quickest way to have big jumps in your net worth in investment sales. And the commission dollars also can be quite lucrative. However, the dark side of that is they can be few and far between, and it is a want as opposed to a need. So those are the differences. All right, what is an investment sales broker? It's basically you are a realtor who is assisting seller and buyers with acquisition or disposition of their commercial asset. This asset is not an owner-occupant property, but one leased by tenants because you're buying it for cash flow. You are assisting investors with the purchase of a set of cash flows that happen to be in commercial real estate, or that you see massive value in repositioning the real estate so the next purchaser will be buying a set of cash flows. Because theoretically, when you're looking at an investment property on the commercial side, you're actually buying a set of cash flows versus the real estate as much, right? That's really what you're buying. You're buying it for the cash or how to make more money or reposition it for the end person to make more money while you're realizing that massive equity gain. All right, 3 things you kind of want to know when you're buying the investment property. The amount of appreciation expected on the property. Now I say that because this is kind of historical. If you look at the history on the appreciation line is 3% on average, right? Your average is about 3%. Now, whenever I'm buying or selling, I'm assuming 0 appreciation because I'm strictly looking at the cash flow and what I can manipulate myself. If I can't manipulate it, I just assume it's never going to happen. And when it does, it's just icing on the cake, right? So that's I don't look at that, but some people do. Like some people who bought in Austin back in 2010, massive upswing in appreciation. So there definitely is a time and a place for that. But when I invest, I'm usually investing more for the cash flow over the appreciation. The current, future, and or potential earnings of the property. That's what I'm in for, right? And then the last part, which is a little more tricky and generally speaking, a little more sophisticated talk, having to do with the tax savings and lending options on how you can manipulate or alter the way a property is structured to offset taxes, or the lending, you can owner finance part of it. There's just different strategies you can do to make this a big win for yourself. You can use cost segregation to reduce taxes. So that can be a big component as well. And in fact, some people buy assets operating at a loss in order to take more of a write-off. So that does happen. We just don't see it very often, especially now right now in our current economy.